I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews of Clayton Menzel, Head of Business Development at Babylon, here to talk Bitcoin, Bitcoin ecosystem, staking, and much, much more. Clayton, thank you for taking the time.
Thanks for having me. Nice to be here.
Yeah, you're very welcome. I'm excited to dive more into the Bitcoin ecosystem, and Bitcoin is the gold standard for blockchains right now, and there's a lot more functionality that's being tapped into than just storing your Bitcoin in cold storage for the rest of eternity. I don't know if it's controversial, but some people are seeing a lot more functionality being tapped into, and I think a lot of people don't understand the potential yet, and maybe the institutions as well. I'd love to get your take on that in the future here, on how interested they might be to be able to earn or actually do something with their assets, which I think a lot of people could capitalize on that as an opportunity cost. So let's dive into all of that. I'd love to start out with a little bit on what you and your team have been building at Babylon, how it relates to Bitcoin, what can it all do, and then we can dive into everything.
Yeah, definitely. So at our core, Babylon is three things. So we're a staking, security, and liquidity layer for Bitcoin. The main thing that we've been building over the past 2 years is a staking functionality for Bitcoin that sits natively on the Bitcoin network. And so if you're looking at like native use cases for Bitcoin right now, it's store value, obviously, and
Mm-hmm.
send and receive. Those are kind of like the base functions that you can use Bitcoin for on the Bitcoin network. What we've created is a staking functionality for Bitcoin that sits
Mm-hmm.
natively on the Bitcoin
Mm-hmm.
network. So if you've ever staked an asset in the past, whether it's staking ETH or staking Solana, where you're securing a network and then in turn receiving rewards for that network security. That's what we created for Bitcoin. I think an interesting aspect of the staking functionality that we've built is that it is non-custodial in nature.
Mm-hmm.
So there is no bridging or pegging of this Bitcoin that exists, and it doesn't leave your wallet when staking.
Yeah.
So it's a very familiar experience if you've delegated an asset on Solana or Ethereum in the past. And in turn, the goal is to offer a reward rate for that Bitcoin.
Mm-hmm.
And then the second element is the security element, right? So, because it's being staked, obviously someone's going to be paying for this security.
Mm-hmm.
And we have a chain that we launched ourselves a couple weeks ago called Babylon Genesis. That's the first Bitcoin secured network or BSN within the Babylon ecosystem. But over time, we'll allow additional protocols to connect to this Bitcoin security. And then the third thing that we think is interesting is the fact that, this staking functionality is being used to mint representations of these staked positions on other ecosystems, whether they be consuming Bitcoin security themselves or they just want the liquidity benefit of, this Bitcoin that we're kind of unlocking through the technology that we've built. Um, but yeah, ultimately, building native use cases for Bitcoin, getting more Bitcoin activity on decentralized rails is the ultimate goal at Babylon.
Yeah, no, it's really exciting. I'd love to dive into all three of those. Starting with the first one, again, a little deeper with Bitcoin staking. You mentioned people are probably used to, you can stake Ethereum as its proof of stake. Also, centralized exchanges, you could go and stake your stablecoin or Ethereum or Bitcoin. But as we've seen in the past, you have to rely on a third party. And in the case of some of these staking networks in the last cycle, they were using your funds and they weren't actually there, and then you lost your Bitcoin, which is the worst thing that can happen. So when you mention it's non-custodial and you're staking, how is this different than what people have seen in the past? How does it actually work?
Yeah, definitely. So I think it's good to distinguish, what we're what is staking and then what other people may like co-opt that term for that are more DeFi related practices. Not necessarily saying that they're wrong by using that word, but staking can mean a couple of different things, depending on what layer you are in the stack. But what we're building is protocol staking. So, these staking positions are being used to provide additional security guarantees to other protocols. So the risk for that, right, is slashing risk, right? So, if you are staking ETH, whether you're running your own validator or leveraging a service that runs validators for people, the main risk that you're going to have, right, is like if that validator does a malicious activity on the network, a portion of your funds would get slashed as punishment for that. Obviously, like at the DeFi level, people talk about staking an asset. That's when you come into risk that goes beyond that, right? So like you have like smart contract exploits, you have counterparty risk that you hinted at, like with BlockFi or potentially a centralized exchange, like not necessarily staking what they said that they were going to stake. But yeah, the main difference for us, right, is like we are building this protocol sort of staking solution, and there's no counterparty risk in that regard.
Definitely. So walk me through. I had some Bitcoin in a cold storage, or maybe I have it on a mobile wallet. How do I get it from there into the staking system?
Yeah, so the good thing is that it doesn't leave your wallet, right? So you are locking it the same way that you would, kind of lock your asset by, delegating or staking on Ethereum or Solana, again, for example, where there is an unbonding period, right? So when it is staked, it is in that staking position. You can't necessarily use that for other things. But we leverage UTXO transactions as well as Taproot on the Bitcoin network that effectively locks that. And so then when you are doing that within your own wallet, it is locked. You are receiving rewards when it is staked. But as long as it is staked, you are quote unquote like tying yourself to that node operator, right? So if that node operator does do something malicious, then a portion of that Bitcoin will be slashed.
Yeah. What's your take on the appetite for staking and an expanded Bitcoin ecosystem from the big players that have billions of dollars in Bitcoin, as we've seen over the last year and a half now? BlackRock, MicroStrategy, institutional investors getting Bitcoin, and of course, they love gains. But if there's a way to utilize that on top of it, is this something that institutions are interested in exploring right now?
Yeah, definitely. I mean, we've spoken to a wide range of institutions. Obviously, a lot of these institutions have Bitcoin. They likely have, higher holdings in Bitcoin than any other asset. But if you're looking at these other assets, a lot of those assets may be staked already, right? So,
Yeah.
at least on the educational front, when talking about staking, they're very much familiar with that, right? ETH has been stakeable for like 4 years. A lot of other staking tokens are in these, large asset managers' portfolios. The main difference, right, is that like, there hasn't been a native staking, experience for Bitcoin yet. So I think that's the main difference is like kind of like not necessarily educating people on staking, but re-educating them for Bitcoin as an asset. That being said, like, the addressable market for Bitcoin compared to, any other asset in the space is significantly higher, right? If you're looking at Ethereum, for example, like 28% of ETH is staked. The amount of Bitcoin that's just in ETFs alone, if looking at dollar value, which is 5% of Bitcoin in ETFs, has a higher market cap than the entire security budget. I mean the amount of ETH that's staked on Ethereum right now,
Yeah.
right? So even if 5% of Bitcoin ends up being staked via Babylon, you'll have more USD value of Bitcoin staked compared to Ethereum within short order, right? Obviously, you need to understand the risk and reward, but if you are that person who has been having this Bitcoin in cold storage for like 5 years, 10 years maybe, earning like a baseline reward rate on that, if you are planning to hold it for 10 more years, it kind of makes sense as long as you understand the risk.
Definitely. And in terms of that risk and reward, with centralized exchanges, they were trying to tout higher rewards higher APYs to attract people to put Bitcoin there versus the other exchange. How does the APY economics work in a non-custodial version, and how does that percentage get determined? Is it some kind of supply and demand?
Yeah. So it's supply and demand. So right now, the Babylon Genesis chain is the only BSN that's consuming Bitcoin security currently. We just launched our protocol around 3 weeks ago, and so the reward that you're receiving for staking Bitcoin is in the form of the Babylon Genesis chain's native token. Once the protocol allows additional BSNs to connect to the network, that will not be the only reward token that these Bitcoin stakers are receiving. And any sort of protocol that's consuming this security can pay in any asset they see fit, right? Whether it be their own native asset, stable coins, ETH, even like a Bitcoin denominated asset like a WBTC or CBBTC or an LST that can be issued through the Babylon protocol can be used as payment. And yeah, so we expect like a basket of tokens to be received for
Yeah.
this security over time.
That's always cool for on the speculative side. If you're receiving more newer tokens and newer platforms that have the potential to grow really large. I know there's been a lot of growth in Babylon already. I'd love to learn more about that Genesis chain and the BSN and that relationship in state. You're staking your Bitcoin, and then the BSN is actually utilizing that security, and that's where the reward is coming from.
Yep, correct. So yeah, we leverage a dual staking model. So our own native token is stakeable as well. But we do want a portion of security coming from Bitcoin, right? So um, I think it's good to differentiate our solution to maybe other shared security protocols that are in the market today, right? Using like EigenLayer, for example, because we get compared to them a lot. The main difference is the security that we're offering is only offered to other execution layer environments, so other blockchains as well as rollups, and where EigenLayer, for example, is only securing other middleware services. And one of the key differences there is the liquidity aspect of what is being unlocked through these staking positions becomes much more attractive to these BSNs to the point where we see like them willing to pay for it because the proposition goes beyond just security, right? Like we're combining security and liquidity. And I think the ultimate goal for a lot of these, future BSNs is not just additional security guarantees, but like a deeper connection to Bitcoin as a network, Bitcoin as a community, and Bitcoin as an asset, to where they ultimately want to see a lot more of this Bitcoin DeFi activity happening within their execution layer environment, and they see, connecting to the security as a way of doing so.
Yeah, no, it's really interesting. And with the Genesis chain launched, is it like a side chain, or is there a term in how Bitcoin actually expanded and how it fits under the umbrella of the Bitcoin ecosystem?
Yeah, so the Babylon Genesis chain is its own layer one blockchain.
Okay.
So it's consuming Bitcoin security. But really, what we're doing with the protocol in general, right, is like exporting the value of Bitcoin security and exporting Bitcoin liquidity onto, sovereign chains that are ultimately more expressive than the base layer of Bitcoin today, right? So it's not necessarily a side chain per se. It's its own, sovereign blockchain. But it doesn't like hinder the fact that there is a scenario in the future to where a lot of these transactions ultimately get settled on the Bitcoin network in the future once there is technology in place that allows for these more exotic transactions to be settled on Bitcoin.
Yeah, that's really interesting. I think I've spoken to another project that they're trying to tap into the Bitcoin blockchain security, and there is no comparison to any other blockchain. Bitcoin is the strongest, most secure blockchain in ever. So I think that being able to tap into that, of course, is going to really help with the security of the chain, which is of utmost importance.
Mhm. Yeah, I mean, and ultimately, right, like Um, Bitcoin volume and activity has lagged compared to, other assets in the space
Hmm.
currently. Um, there's likely a lot of different reasons for that, but I would say that the main reason is that, the base layer does not offer, a place to perform like,
Hmm.
trade and things like that. And really, if you're going to be, doing transactions in ETH, or doing transactions in Solana in Sol, um, you're likely going to be doing those on the Ethereum network or Solana, respectively, right? Because like those assets are in turn securing your transactions that you're, using that asset with, right? So
Hmm.
if we do get more Bitcoin activity on decentralized rails, like our thesis is that the majority of that activity is going to be on Bitcoin secured networks, right? So
Hmm.
it's not necessarily like our plans to eat um, market share, so to speak, of like WBTC or CBBTC or that sort of like trading volume. It's to bring more of this like centralized trading volume on chain and then get them on execution layer environments that are secured by Bitcoin as a whole.
Hmm. And you mentioned EigenLayer earlier. I know there was a big thing around liquid staking and liquid restaking, and people that are really into DeFi, they really get into it because you can stake, then you get more tokens, and you can stake that for further APY, and on and on and on, which can get complex. But if you maybe there's more risks there, but there's more reward. You mentioned with Bitcoin, you can stake it, and then you're also getting the BSN token, and you can stake that. Is this a form of kind of restaking, or is there something coming where the native Bitcoin can be restaked or liquid, or is that really not in the works?
Yeah, so a lot of our staking positions on the network today are in the form of these LSTs, right?
Mm-hmm.
So I think if you're looking at the difference between like, LSTs and LRTs on Ethereum and the LSTs that exist via the Babylon protocol, right? Um, the main difference is like, you know, none of this Bitcoin was expressed in the form of an asset on Ethereum to begin with.
Mm-hmm.
Or some other execution layer environment. So I would say like 75 to 80% of our TVL is through these LST issuers right now
Mm-hmm.
because like the value of this like just liquid Bitcoin existing
Mm-hmm.
on
Mm-hmm.
a protocol goes beyond just like the reward rate that you're being offered.
Yeah.
Um, it would be similar. I would say from a staker's perspective, this comparison to like restaking versus what we're doing is a little similar, but there are nuances, right? Like, the
Mm-hmm.
Bitcoin hasn't been staked yet, so
Mm-hmm.
it's not restaking,
Mm-hmm.
but you are, in the future going to be receiving multiple different rewards for these staking positions,
Yeah.
once additional BSNs get onboarded. Um, I mean, obviously, there's going to be, additional risk associated with that. If like you're adding,
Mm-hmm.
multiple, reward sources through a single position, especially if they're slashing for every single one that you're doing.
Mm-hmm.
But I would say, like, from, historical data points, like maybe like 500 slashing events have existed on Ethereum. Generally, those are like 1 ETH per slashing event, so like 500 ETH.
Mm-hmm.
Um, if you're looking at like exploits and smart contract hacks and counterparty risk, um, that's in like the hundreds of billions of dollars, right? So
Mm-hmm.
I think people are always going to be looking for additional reward sources. Obviously, staking poses its own risk. But counterparty risk like BlockFi and
Mm-hmm.
FTX and Celsius or like exploits, whether they be malicious or just mistakes at the smart contract level, um, go beyond it being like, at least historically, like much more uh, larger of a problem compared to like slashing events on chain.
Definitely. I think making it as easy as possible, that was, I think, one of the reasons that people were inclined to use these third-party providers because they were touting that, it's easy, just give it to us and we'll do all the, staking, you just get your reward. So is there a lowering the barrier to entry for Babylon to make it easy? People are, I think when people have their coins in cold storage, they're uh, they're afraid to do something wrong, and lose them or transfer them. And you're saying it's still in your wallet. But how are you guys making it as easy as possible for the user experience to understand this is safe, secure, and an Amazon experience, less clicks as possible to get it done and get a reward.
Yeah, I mean, it's through the technology that we've created, right? So, we are, trying to build the most similar experience we can for staking Bitcoin compared to staking another asset, right? So,
Mhm.
there are UIs, getting this embedded into non-custodial wallets and, getting this
Mhm.
embedded into, UIs that people actively use to stake other assets is important. But yeah, having like a single click to stake button, that's,
Mhm.
similar to delegating another asset, whether it be like Ethereum or Solana or another proof of stake protocol, is, what we're striving, the ecosystem to build.
Mhm.
And then just like having a lot of education, right? Like making sure that people are aware of the risk. There are still risks, but they're obviously not the same as counterparty risk because it is non-custodial in nature.
Definitely. And are you guys partnering with your wallets and exchanges to, make it so that people don't actually have to search out the Babylon platform? It's right there in your wallet.
Yeah, definitely. So I mean, we have probably around like 20 different Bitcoin wallets now that support the Bitcoin staking functionality. We do have a couple of qualified custodians as well, for institutional. So Anchorage, Hextrust, BitGo. We do have some exchanges that are supporting it, although they are like centralized exchanges, but
Mm-hmm.
not necessarily an issue, especially if it's like a prominent exchange
Mm-hmm.
supporting that. Um, but yeah, the goal is to get this staking functionality embedded into every place that people already hold Bitcoin.
Mm-hmm.
Just so there isn't like that, additional speed bump of like, oh, I have to move my asset over. I mean, anytime you like, move like an asset in crypto, like there's its own risk attached to that as well.
Mm-hmm. Mm-hmm.
So making sure that, there's less friction within the system as possible is important.
Definitely. And I'm curious a little bit more on the institutional side and the ETF side. I've seen other assets like Ether. There's discussion and proposals around having these ETFs with staking, integrated in it natively. Do you think there could be a Bitcoin Babylon ETF or some way that really warms up institutional investors who are used to just buying the ETF? They don't want to buy spot Bitcoin because they're used to buying stocks for the last 30 years. How can we get them to have the custodian of those ETFs staking in Babylon?
Yeah, definitely. I mean, again, it just becomes like an educational thing.
Mm-hmm.
And if the rewards outweigh the risk, or at least like the risks are understood. But yeah, we have been talking to, larger ETF and ETP issuers. Obviously, for some, depending on jurisdiction, it requires, changes and legal regulation and, approvals on these, ETF vehicles. Um, but yeah, I mean, personally, I expect to see, e-staking within ETFs
Mm-hmm.
approved in the US, likely later this year, if not
Mm-hmm.
sometime early next year.
Mm-hmm.
Um, and that does, pave the way for Bitcoin staking to be embedded in these Bitcoin ETFs in the future for sure. But
Yeah.
I'm not sure, like none of this is like legal advice or anything.
Yeah, for sure. No, I would expect it. I think things just take time, especially with the other assets. I saw there's some delays in the ETF decisions, but it looks like the crypto market is now turning around again, and at least Bitcoin's going strong, back over 100,000, which is always good news, probably for Babylon as well. And you mentioned the BSN launched, within the last month. Can you talk about that launch, like the success so far? Is it going as expected or better than expected?
Yeah, it's been going well. So, obviously, we're fairly conservative in how we launch things, just because a lot of the stuff that we're building does sit on the Bitcoin network. And,
Mm-hmm.
we're obviously like no one is in a place to roll back that chain. That's why the
Mm-hmm.
chain is so valuable. But yeah, the Genesis chain is now consuming this Bitcoin security. Our ultimate goal in the future is for it to be this like large, layer one protocol to where a lot of this Bitcoin activity does take place, right? So it is a smart contract enabled blockchain. We will be building an EVM instance on that blockchain with the goal of bringing, large, um, you know, uh, Solidity based DeFi applications within the layer one. Um, and having it as like a safe, secure place for people to do Bitcoin related stuff if they wanted to. So we launched that chain last month. The launch went smooth. The goal now is to add additional features and use cases for Bitcoin on top of that as we grow later this year.
Yeah, no, that's really exciting to hear. And yeah, I would love to see some EVM compatibility and make it easier for people where all the TVL is on these EVM chains to be like, hey, I can jump into Bitcoin, and it's probably the TVL there is undervalued in comparison because it hasn't been around for as long, and see that grow. So I'm looking forward to that, and those updates in the rest of the year. And you mentioned this potential to have like other chains or other platforms or other developers build on more on with the BSN. Is there the developer documents are ready for that, or is there a timeline in sort of opening the floodgates to others beyond growing the Genesis chain?
Yeah, so allowing other folks to connect will likely happen sometime in Q3 or Q4. Obviously, we want to make sure that everything's running smoothly. But once we're confident in that, we'll likely allow people to do that later this year. Um, but yeah, any chain would be able to connect pending tech support. So right now, any like Cosmos chain as well as Arbitrum and OP Stack rollups can connect. We did make an announcement with SWI last month. So they're planning on becoming a Bitcoin secure network as well. So
Wow.
our reach goes beyond like just app chains and rollups, so to speak, but even like large layer ones are interested in what we're offering.
Yeah, I feel like there's a symbiotic relationship there because, on one hand, these other chains, they want to be secured by Bitcoin because it's the strongest, most secure chain, and at the same time, expanding Bitcoin into the EVM ecosystem where the TVL is right now, it's a win-win situation for more interoperability and growing the liquidity of DeFi.
Mhm. Yeah. Um, Yeah, I mean, obviously, like, there's this renaissance happening with like, BTC Fi in general. So, I think a lot of these protocols are looking at what we're offering and, they're attracted to the, security aspect of it. But, this like dual value proposition of security plus liquidity is really attractive to them because, they want to be this hub for Bitcoin activity as well, right?
Mm-hmm.
Obviously these native tokens are valuable, ETH is valuable, stablecoin is valuable. The most like pristine collateral, is Bitcoin.
Mm-hmm.
And so everyone is interested in that, right? There may be reasons that like people are not interested in, certain stablecoins or other assets, but
Mm-hmm.
it's really hard to be in this space in general. And not have like some positive viewpoints on Bitcoin and wanting that, liquidity within your ecosystem.
Definitely. All very interesting, Clayton. What is the best way to, like, if I have some Bitcoin, start testing it out, start staking it, and like experiment with the Babylon Genesis chain?
Yeah, so I mean, you can look at our documentation on how to, get familiar with some of the tech that we built. So you can go on babylonlabs.io um, and get some more information there. But yeah, anyone with a, non-custodial wallet, can likely be staking Bitcoin today. But definitely recommend reading the documentation first.
Yeah, sounds great. Yeah, the more informed, especially non-custodially that you are, the better off you are as we're taking finance into our own hands. I appreciate your insights into Bitcoin and the BTC Fi ecosystem expanding, and it sounds like a great early success for Babylon in the Genesis launch this month. I'm looking forward to seeing how Bitcoin price plays out, more institutional adoption, and eventually getting that into more staking and DeFi with Bitcoin from the greater institutional ecosystem, which will bring billions of dollars in. So I would love to follow up in the near future as the coming months roll out with the Genesis chain getting stronger and more secure and those updates. And I appreciate your insights, Clayton, into everything with Bitcoin, Babylon, and thank you so much for taking the time.
Yeah, thank you, sir.